Hi, I'm Brian McGough. I'm head of the retail team here at Hedgeye, and I want to talk a couple minutes here this morning about why we're short Target. Now, this is not all about the data breach everyone's been hearing a lot about. It plays a little bit of a part, but there's a lot more to it. Earlier this week, I put out a 47-page slide deck which walks through the entire thesis. Obviously, I can't walk through all of that right now, but I cherry-picked 5 slides which I think do give a pretty good sense as to where I'm coming from. So let's just jump right into it. So the first one is macro. And I know a lot of people don't do macro, but you should do macro. Here especially, if you look at this chart, it shows you that we are 5 years into a margin expansion cycle for department stores. Why is that an important number? In the history of department stores, we've never seen more than 5 years where margins have expanded. There's always been a big fall off. Maybe we see a 6th and we set a new record. That'd be great. But we are in the twilight of margins for department stores right now. Unfortunately, that does include Target. Next thing I want to talk about is Target's statistics for visitation at its stores. And this ties into the data breach a little bit in that they upset a lot of customers in the fourth quarter. If you look at this, this is the overall statistics for visitation as reported by each of the past 3 surveys that we did to 1,000 consumers over the past 6 months. There was one in 3Q, 4Q, and we just did one last week. And you can see on here there was a dramatic fall off with the overall count of who visited Target now versus fourth quarter. And on a relative basis to other stores as well, that really came down quite a bit. So not very good here. There is an impact and the company has to deal with that. So where is this market share going to? We go over to our next chart, and this one just scares me. It shows the overall change from 3Q into the quarter that we just did, and it shows Walmart gained 2.5 visits, which is actually a lot. That's a really big number. And you have Target that lost 2.3. So it literally went from one retailer to the next. And I'm telling you right now, if there's one retailer on the planet I don't want to lose market share to, it's Walmart. Because if they take that share, they're not giving it back. So I think there's going to be a really, really tough road to hoe here for Target as far as how they go about trying to get that share back. Next, I want to talk about .com. Why? Because with a lot of stores, when they have a problem with their traffic in the store, they do rely on what's happening with their .com business in order to save them. Target, unfortunately, doesn't have that. If you take a look at this chart here, it shows the spread in traffic for Walmart versus Target. Again, this is per a survey of ours. And it shows that Target just really dropped over the past 2 months. Not very good at all. They have a very weak .com business. In the slide deck I did earlier this week, I make a pretty good case that they have the most unsophisticated web business in all of retail, which is a big statement, I think, for a company like Target. So I don't have a slide on this next point, but it's Canada. So there's a lot of work that we've done on this overall. The reason why it's important is because you got management who's talking about it, that it's going to be something that will save them over the next 3 years. I have never in my career seen a retailer who has gone up to Canada in order to get more profitable. We looked at demographics around all of the stores. We have a lot of great statistics. The point is we are so far below where the street is and where management is with top line growth in Canada over the upcoming 3-year time period. So I'm very, very bearish on that. So lastly, I'd flip you towards this chart that shows where our estimates are as I stack them up versus the consensus for EPS. Now, that actually does look like a pretty big spread right there. I'll tell you though, this is Target. I mean, if they miss by a penny or 2 or 3, a nickel, that's a really big deal. I mean, I've got them out in 2017. The street's got them at 664. I've got them at 480. I mean, I'm just nowhere in the ballpark. I think that this model is so jacked. It has very little room for error and everything has to go right. And unfortunately, based on our research, very little is going right. So I'll stop there. I appreciate you listening in. Again, this is Brian McGough. You can reach me at Hedgeye Retail on Twitter. Thanks for your time today.